Hey there, everyone. Dave Keller here with Market Misbehavior. Super excited to share with you today top 10 charts I'll be following for October 2024. Sort of a mix of sectors, mix of ideas, mix of technical analysis configurations, 10 interesting charts to talk through and review and go through with you here in a moment. Before we do that, this video is brought to you by Seeking Alpha. They're actually raising their prices at the beginning of October, and I would love for you to check out the special deal they have going right now. Here's a little bit more about what you can expect there. 3 things I'll tell you about that I use often. Number 1, what they call the market data section, and I love the fact that they just lay out key ETFs for pretty much everything, where they're looking for dividend payers, for emerging markets, for growth or value or style or market cap size, all of those different things. There's an ETF that probably tracks that space, and they've done a great job of sort of curating the key ETFs you probably want to analyze as an individual investor. Second thing would be what they call comparisons. They do a great job of sort of looking at things like 5G plays, airlines, AI stocks. And when you click on one of those categories, they give you example stocks that are in that group, sort of that peer group, and they help you understand the relationships and the performance within that space. Now, this is more how institutional investors think of the equity universe, and it's giving you those tools as an individual investor. Finally, I would go to Stock Screener, and this is a part of the platform that I love quite a bit, because you use their quant score. Now, any institutional investor knows you need to have a quant model. This is what we call an alpha model, a way of analyzing the characteristics of successful companies in previous cycles and looking for stocks demonstrating those characteristics today. They have a robust quantitative model using best practices, looking at price momentum, earnings quality, and a lot of other things. If you dig into that Stock Screener, you can leverage an institutional quality alpha model as an individual investor. Go to marketmisbehavior.com/seeking alpha. It'll give you a little better deal and allow you to get in a lower rate before the prices go up at the end of September. So make sure you check it out today. Let's get to the charts. All right, so here's the first of the 10 charts I'll be sharing with you. Comcast. Now, this is in the communication services sector. Obviously, going to sort of a traditional media cable provider type of name, but really more of a multimedia enterprise at this point. What's interesting about the chart of Comcast, I would say, arguably, it's sort of a rounded bottoming pattern. And what a rounded bottoming pattern basically is when you have a deterioration phase, right? When we have a general downtrend of lower highs and lower lows, then all of a sudden we kind of stop making new lows. And what's interesting about the chart of Comcast is if you look at the October low from late 2023, the April and June lows of this year, you can see we sort of stabilize here around that $37 range. We had a couple times where we sort of got at or near that level, and we really didn't spend much time below there. Every time we dipped below 37 or sort of touched 37, as we did a couple times there in July, we rallied back off of there. Now, what was interesting about the chart of Comcast for the last couple months is we failed to eclipse the 200-day moving average. And so it's sort of been in a basing pattern or an equilibrium phase, right? A consolidation phase where, market's been telling you that Comcast is worth around $38, $39 a share, and we're just kind of fluctuating around that equilibrium price. Now, when you have a chart that settles into an equilibrium phase or a consolidation phase, in some ways, some of the easiest charts to play, because what I would say is you basically wait for that pattern to break, right? At some point, price isn't going to go sideways forever. At some point, either buyers take control and push price above resistance, or sellers take control and push price below support. What we see from Comcast here in the last week is it certainly looks more and more like buyers are winning this battle. Finally, we're seeing a new accumulation phase. Comcast finally above the 200-day moving average and into Friday's session, appearing to show some strength going into the weekend. I would love to see if we could get a confirmed follow-through above that July peak around 41.50. See if we get upside follow-through after the strength that we saw through the course of this week. But overall, Comcast is improving in terms of the price characteristics, higher highs and higher lows. In terms of the momentum characteristics, which is actually showing stronger momentum, the RSI pushing above 60 this week as the price is going higher. So Comcast has been kind of a nothing burger for the last 6 months, to be honest with you. That's a technical term, by the way. But the fact that we're seeing renewed strength, the fact that we're seeing price making a new 3-month high, which is what I saw when I was scanning earlier in the day, and the fact that we're finally pushing above the 200-day moving average is telling me more and more likely that we mount a retest of that $46 range, which would put us to the 2023 and 2024 peak. So Comcast, a good starting point for the top 10 charts to watch. Second one, AT&T. And to be honest with you, I would say the chart of AT&T could certainly have been in my top 10 charts to watch every month for the last 6 months, because after we had this breakout in May and June, you've seen consistent accumulation. Now, worth noting, by the way, this is a higher yielding name, about a 5% yield. So probably better if you use the unadjusted data. And on stock charts, you put a little underscore before the ticker, but on whatever platform you're using, your chart may look a little different if you're using what's called the unadjusted data, not adjusting for dividends. I think it's good to look at it in this particular way because I really just want to demonstrate the consistent strength of the uptrend. So this is basically including dividends in your performance. And if you look over time, that's what's really showing strength here, where the price is above 2 upward sloping moving averages, where the momentum is strong but not excessive. I mean, look at how consistently it's remained above 50 here in the last 6 months. The relative strength is really starting to improve, and I would say the dividend component is certainly a big factor there with AT&T. Now, AT&T is in the communication services sector as well, but Comcast and AT&T, very different businesses. Some similarities, right? They're both internet businesses in different ways. But AT&T obviously has, sort of the traditional telecom feel. It's really part of the old telecom services sector, which was AT&T, Verizon, and then a bunch of smaller providers after that. So, generally speaking, this is a stock making higher highs and higher lows. Over the last couple of weeks, we made a new high above $22. We pulled back and are now coming off a higher low. So as long as this remains in this consistent uptrend of higher highs and higher lows above 2 upward sloping moving averages, this is the kind of chart that I would love a portfolio of charts that look like this, that keep compounding their gains, that keep remaining in uptrends, keep remaining above upward sloping moving averages. That it's kind of a good chart that keeps getting good. And I also like, and I think one of the other things that's important, seasonally, October tends to be one of the weakest months. And since we've had so much strength in September, I'm wondering if October is a little more negative than usual. And if that's something you're concerned about, going to low volatility, higher yielding names is a proven way of navigating those sort of challenging market periods pretty well. So maybe worth a look as well. Third one, same sector, but again, a very different business. This is BIDU, which is one of the Chinese internet names. This particular pick of BIDU is really a proxy for all the Chinese stocks that have rallied pretty well here over the last 2 weeks. What happened is when the U.S., the Fed, lowered interest rates in the U.S. or lowered the target rate, China soon after, the Chinese government sort of did, a big run of easing, and that's giving a lot of upside boost very, very quickly here in the last week or two from names like BIDU. So a lot of the names in this in this region, particularly the Chinese internet names, are having nice upswings, consumer names as well. What I like in particular about BIDU is this week we gapped a couple times, but we gapped above the 200-day moving average. Paul Tudor Jones famously said nothing good happens below the 200-day moving average, and BIDU's been languishing below its 200-day for over a year. It was mid-September of last year when the stock broke down through the 200-day moving average, has had a number of attempts to sort of pop above there, most recently in May and in July of this year. All of those have failed to follow through. This week, the strength that we saw propelled the stock from around 86 up to around $105 a share in just about a week. And that strength is what impresses me the most. The RSI is getting to extreme overbought conditions with an RSI above 80. That usually implies that whatever trend is happening is not done. We may be getting near the end. We're not there yet. And so there's probably a lot more upside. We just call that the good overbought. When an RSI was above 80 on a rally. So there's price strength, there's momentum strength. The trend now appears to be changing. The question I would have on a chart like this, thinking about risk versus reward, is just making sure you keep stops relatively tight. And I would say the gap that we experienced on Thursday, the 200-day moving average is right around $100 a share, which is a big round number. I think holding a name like this with that as your natural stop, and a natural stop for me just means the chart provides a pretty clear, exit strategy based on previous performance, based on a particular technical indicator. I think BIDU presents a pretty decent risk reward if you think about the opportunity to retest some of those highs from 2023. That's a lot of upside. If you limit your downside, that's a pretty attractive entry point. Chart number 4 of the top 10 charts to watch in October, Spotify technology. I use Spotify all the time. They are not a sponsor of the show or the channel. I'll work on that, but Spotify, obviously a pretty widely used platform, and the price performance has really shown the strength. Look at the last 2 years. Look at the strength most of the time through 2023 and essentially all the time through 2024. While the markets themselves have had upswings and downswings, we've had a couple meaningful drawdowns for the S&P 500 and the NASDAQ, but Spotify's having none of it. It's remained for the most part above 2 upward sloping moving averages for the entirety of 2024. The momentum overall has been quite strong. The stock briefly dipped below an RSI 40 level in July, but a gap higher in late July sort of fixed that. What's interesting about the chart going into or coming out of this week is you're seeing a little bit of short-term weakness through Wednesday, Thursday, Friday. And I'm wondering if we get another pullback to an ascending 50-day moving average. That's one of those tried and true approaches as a trend follower as well. Look for strong uptrends and look for short-term weakness within the context of a long-term uptrend. Spotify might be setting up with that particular thing. So the way that this pattern would kind of work is you keep making a new high, and then when we pull back, we make a higher low, which means looking for support sort of in that 320 to 340 range, which would be the 50-day down to that September low. As long as we find support in that kind of range, that's sort of a decent buy the dip sort of approach. The RSI had been overbought for the last week or so and just pulled below that overbought region. Potentially, the market's not closed on Friday yet, but look to see if it holds that RSI 70 level. But if it pops below that, that's usually what a tactical pullback kind of looks like, similar to what we saw like back here in March of this year. Pull back when the RSI comes out of that overbought region. Maybe we set up for a higher low and a bit of a lower entry point on a long-term winner. Chart number 5, a little bit similar to Spotify. This is Meta platforms, and I'm realizing as I go, about half of the stocks are in the same sector in communication services. I started looking at comp services first today, and I kept finding so many interesting charts. I eventually had to force myself to say, all right, I got to include some other sectors here as well. So the rest of them, I don't believe are in. They're in consumer discretionary. You got some healthcare. We got some materials represented. So it's not a comm services top 10 today, but it's worth noting, number of interesting charts that I'm able to find here. Meta is an interesting one, and I'll zoom in a little bit to like a shorter time frame on the chart of Meta just to show you a little bit of what I mean. Meta, I think, is an important chart to watch, not necessarily because I think it's the best chart I'm finding right now. I'm finding other charts that I think, even some of the ones that I've shown before in this list, that are more actionable, meaning they're at a particular point, which makes sense. I think Meta is a key chart to watch because a number of the stocks in the Magnificent Seven have had a lot of strength in September. Tesla and Meta stand out to me. What's interesting about Meta is there was resistance very consistently sort of in that 520 to 540 range. That was the March, April, June, July, August peaks, kind of all around that point. And then something changed in September when we finally popped above and made a new all-time high for Meta. The stock's overbought now, which means you may wait for some sort of tactical pullback for a more ideal entry point. But most recently, we tested 540, we pulled back to the 50-day, and then made a new all-time high. I think the real question for this chart is whether we're able to hold that breakout level, right? When you have a stock that has very clear, well-established resistance, we finally break above there, I immediately think, all right, this is a chart that's now innocent until proven guilty. I'm going to assume that uptrend continues, and I look for confirmation in the fact that we hold that breakout level on a pullback, right? And so 540, I think, is that level to watch. On a platform like Stock Charts, there's a really cool tool to use. This is called the Auto Support Resistance. I like to use that particular one, and I'll just save that as an example. So you can see the fact that when the price is above the trend line, it's green. If the price breaks below it, it turns red. And that's a great way if you have a bunch of charts where you're monitoring a support level or resistance level, you can flip through them quickly, just visually do a quick test and see if that level is holding or not. I think as long as that 540 level holds, this is a pretty good chart. But that's the question into October is, if we break 540 on a chart like Meta, all of a sudden this is a failed breakout where we attempt to break to new highs, but we don't hold it. If we're able to hold 540 into October, that means this is a good breakout. And how bearish do you want to be if stocks like Meta are pushing to new all-time highs and then continuing their gains? So that's why Meta, I think, a key chart to watch here. All right, now to the bottom half of these ones. We are getting into some other sectors. This is consumer discretionary here, VF Corp, ticker VFC. This is a different chart than the first five we've shown you because this is one that's really, I think, a beautiful illustration of a rotation from a distribution phase to an accumulation phase. Now, different people have different ways of describing these different phases in the markets, or Stan Weinstein has like his stage theory where he's talking about different stages. This is how I think of it. I think of a chart at any point in one of three phases: an accumulation phase, meaning the price is going higher; a distribution phase, meaning the price is going lower; or a consolidation phase. The buyers and sellers are in agreement or are in equilibrium. And by just making that quick initial assessment and saying what phase is this in, and then all your other analysis sort of has that as a framework, I think is helpful. I think this is a stock that was in a very clear distribution phase into a low in April and May. You can see once we hit that April low around 12, we sort of retested it a couple times, then finally made a higher low in July, which then resulted in the continuation of that uptrend, and now I would say a new accumulation phase, with the gap higher in July as a clear and key moment in that point. We broke higher, we gapped higher, we pulled back and tested that gap as support, which was also the 200-day moving average. We now have made a pattern of higher highs and higher lows. That rotation from distribution to accumulation, the fact that the momentum is overall strong but not excessive, the fact that the relative strength is starting to improve tells me this is an area of strength. And I like a chart like this. I think of it as innocent until proven guilty. I'm going to assume that uptrend continues, and I'm happy to ride that trend higher as long as it goes on. I know when before I started working closely with big money managers at shops in the Northeast, I used to, think about selling strength, right? When a stock would rally, when it hit some target, I'd be like, all right, let's take some profits. Then I started working with big money managers running big mutual funds. And they'd say, I'm not touching this name. This thing's working. It's one of my top performers. I'm not going to touch it until the stock tells me to stop holding it, right? Until the evidence tells me that it's not going up anymore. And that's how I became a devoted trend follower. VF Corp for now, slow and steady gainer. Lennar Homes is number 7 on my list. This is really a placeholder for all the home builders. I don't really have a strong conviction on individual companies, and that's where I think ETFs like ITB or XHB can be super helpful. What do you use, an individual stock or an ETF? I think in a lot of ways that is more of an individual call for you and your portfolio and the due diligence that where you think about the liquidity of getting in and out of positions, the transparency about what exposure you're getting, whether you have conviction on an individual company or if it's more of a theme, whether the stocks are highly correlated, meaning they move kind of similar, so there's no real technical benefit of diversifying away from an ETF. So answering all those questions are the way you determine whether you want to buy an individual stock if you're so inclined, like Lennar, or an ETF like a home builder ETF like ITB. And this is one where, to be clear, I don't really have strong conviction on one or the other. So Lennar is a way of demonstrating this is what a lot of the home builders look right now, and I think they're pretty strong charts. The chart of Lennar is fascinating in that we've had a number of tests of the 200-day moving average after breaking out from a 2022 decline. Late 22, after an October low, Lennar started to pop higher. It's had a couple meaningful pullbacks to an ascending 200-day moving average, and overall has made new highs soon after. Most recently, we pulled back to the 200-day in July. You can see we made a new high above 170, and that's when it really hit my radar, when we broke above that resistance, when it hit my new 3-month high screen. Then soon after, we pulled back, and that resistance became support and became a launch pad for this next uptrend. Over the last week, a lot of the home builders have pulled back a little bit, and now starting to rotate higher potentially into next week. So going into October, I think home builders are a decent bet. One of the reasons why, a non-technical reason, is an interesting play on lower rates, right? So if interest rates are getting lower, anyone that was hesitant to buy a house because it was so expensive to borrow money at a 5% 10-year yield, what about now that it's a 3.7% 10-year yield? It's a lot cheaper to borrow, right? And so that's the benefit of the Fed starting to lower rates. They're trying to make things less expensive, make it easier to borrow money so that people are more encouraged or more motivated to buy a home, to buy a new car, to take trips, and all those things that are more discretionary purchases. So Lennar and other home builders, I would say, interesting play on lower rates and on the Fed continuing to lower rates, which I think is pretty much a guarantee at this point, barring some huge unknown factor that we can't really price out. All right, number 8 of 10 charts to watch here in October of 2024. XRAY, this is in the healthcare sector. It's in the medical supplies group. And what's interesting about the chart of XRAY, I would say it's still a little early, but I think what this demonstrates is a classic configuration called a bullish momentum divergence. Bullish meaning it's going higher, or the implication is it's going higher. Momentum because it's comparing price to the momentum indicator. In this case, we're using RSI. And a divergence because lower prices, higher momentum. So there's a divergence between the price action and the momentum. When that happens after a downtrend, it usually implies that the momentum is a better indication of the strength of the implied strength. Now, full caution, you had a similar bullish momentum divergence at a May low. Did not really play out. We very quickly made a new swing low, which usually is an exit to that sort of thing. You did have a very encouraging bullish divergence October through November of 23 on higher momentum, which worked out quite well. For now, this appears to be a pretty constructive rotation as we've now gone back above the 50-day moving average. We're making a higher low. I would love to see it get above those July highs. Even more, I would love to see it get above the 200-day moving average, but I think it's an important chart to watch to see if you get that completed rotation. So I think we did have a distribution phase. We had a consolidation phase. We exit the consolidation phase by getting above 27.28, and it's right about there. So I think going into October, important chart to watch to see if you do get that upside follow through, in which case I think that's a decent bet that could be made. Chart number 9, we'll get to the material sector for these last two, I believe. Freeport-McMoRan. I wrote an article earlier this week on CNBC Pro, so if you want more deets on this particular chart and some of the motivation, you can check out my work there. But I would say overall, this is a classic head and shoulders top. If you look at the high in May, the lower highs in April and July, the measurement was perfect. So if you take the height of that pattern after we broke the neckline, it measures down to right about $40, which is where we ended up bottoming out in August and September. So just a textbook rotation off of that downside objective. Now we've made higher highs, higher lows. We are above the moving averages, which are now sloping higher. We are overbought as we test resistance. So I think going into October, I'd look to see if we get a pullback and then sort of a rotation higher. So a higher low that allows you to play upside for copper, like Southern Copper and Freeport-McMoRan. Final one, gold. And I'm a bit of a broken record on the gold trade. Full disclosure, I do not own GDX. I do own GLD in accounts that I manage. So I'm making this a form of bet on this play right now. The GDX and gold stocks pulling back on Friday, down about 3% using the GDX on Friday, but I think it's the longer trend that I like, right? When you look at a chart like GDX, and I forget which other chart was similar to that, maybe Spotify, which had a nice rally, and then we pull back. And so, again, tried and true approach is by strong charts that are pulling back and making a higher low. Look at the chart of the GDX and look at pullbacks to the 50-day in June, in August, in early September. Every one of those we've traded just slightly below, but that's where you start to accumulate to play that next leg higher. I think gold still, gold future, gold spot gold is in a primary uptrend. One of the ways to play that is looking at gold stocks and assuming that they will be in good shape, assuming gold continues to thrive. And while the gold and silver charts continue to look bullish, I'm continued to I'm continuing to think that something like gold miners could be a decent bet. Again, not quite to the overbought region, but we are pulling back a little bit. As always, when you have a positive trend of higher highs and higher lows, look for that higher low. And one of my mentors, Ralph Akinpor, would say, in an uptrend, you know we're going up, so just make sure we make a higher low. And every time we do, that further validates this uptrend. I think that would be what I'm looking for on the chart of gold and gold miners going into early October. Folks, that's it. That's a wrap for our top 10 charts to watch for October 2024. Can't thank you guys enough for watching my channel, for following me in my work. I appreciate all your thoughtful comments and feedback as I ramp up with a market recap show called Chart This with Dave Keller, which we do every weekday at the close, with interviews that we will be launching here in October and a lot of other great content. So for Market Misbehavior, I'm Dave Keller. Have a great one. I'll talk to you again soon.